And also with when you talk about cryptocurrency, one of the other things that many times people ask is about options. Many times there's they're sending out emails, hey, you can learn options, you can. And one of the things I tell people that I think is just really important when you do that. Options is a very difficult, complex. I have been 20 plus years in this business, you longer than that, and I don't mess with options very much. I might play a little bit here and there, but that's not my retirement. I'm very careful and cautious. And that's not to say that somebody couldn't learn or do something, but here's where I caution you. Don't get caught up in that's how you're going to make your millions of dollars, because I've never known anybody, unless it's the guys at the top, that's what they do with a lot of sophisticated tools and training and teams to do that. Don't get caught up into this. You're going to get some training and then go in and make millions of dollars. Forex is another a hot item that comes through, and you're going to do foreign exchange options, and you'll make a little money, but that's not, and I'm not against somebody doing that to learn, but don't go into that and drop all of your money and think that you're gonna get rich with that. I've never seen that. I've seen some of the best and brightest minds in this business, a lot smarter than I, that were not able to crack that code. So don't fall for that. Don't be afraid to play with it a little bit, but you don't want to put money that you're going to need in something like that and think that that's going to be your future.
Speaking of options, it's the leverage that works for you in option. Yeah. If I put down $1, I can borrow 9 and have $10 working for me. Yeah. Now, obviously, if that goes up 10%, then I made $1,000, only $100 invested. That is a huge return. That's great. But just as quickly as it goes down, the leverage, it comes down in the same proportion. Yeah. Yeah. It can wipe out my original investment totally. Back in the days they talk about the Depression, that was when people had a call when your account dropped below the 70% or 80%, whatever it was at that time, then you had to come up with the money to make up the difference. But along with that are futures. And people, Don, anything that people get into, somebody makes an investment out of it, that's whether it was ever intended that way or not. For example, when we look at options, but we also look at futures, there were times when the farming industry, for example, needed to hedge against a bad season. So they would buy their fertilizer or their corn or their whatever it is that they had to have. If you were a big bread manufacturer or bakery, you had to have wheat, and you didn't know what the price of wheat was going to be in 6 months or a year. You locked in the price, and you knew then what your cost was going to be. That's right. The problem, and that was good because it became a matter of security, of locking in your price. But then people started investing in it, as we call it, or gambling in it. Mm-hmm. Oh, I think, they'd look and say, well, I think we're going to have a bad season. Corn prices going up. I'm going to buy corn prices now, and then when they go up, I'll sell, which is an option. I buy at one price, and I sell at a future price, hopefully. So there again, but that brings me back to remind people of something that we often forget, that the investment world is an auction world. That's right. You've got to have buyers and sellers, and it doesn't necessarily reflect value. It's just like when you go to an auction, and I think most of us has been to an auction at some time in our life, and somebody's willing to pay more for whatever reason. It may not be as an investment. They just may want to own it, especially if you've been to an auction where there's selling antiques or furniture or something like that. Looking for bargains. Everybody looking for a bargain. Yeah. And you go and you pay what somebody else. We have to remember that even the stock market is an auction market. That's right. And you got buyers and sellers. And sometimes you got more sellers than you got buyers. Yeah. And you know what that means? The price is going down. So just as a reminder.
It is. And it's not to scare somebody, because done right, the market is an incredible tool. It really is a tremendous gift to help people if you do it the right way. It's generally when we get caught trying to do something out of our capacity or ability, chasing gains or hot dots or the next things that we get in trouble. The market really is a gift. If you use it correctly, it can really help you build a retirement. And you have to remember that, because at the end of the day, it's buyers and sellers. It's a sum total game, meaning there's winners and losers. And somebody's going to win, somebody's going to lose. And done right, there's no reason for you to lose. You can hold a long-term capacity of investing, and you can get great returns, ups and downs through the market segments. But when we talk about options and futures, I've done a lot of research based in my degree. We've studied corporations, million and billion-dollar corporations that have been taken out on options. So they are not for the faint of heart. They're the same with futures. So the point being, it's great to learn that. And that's what I tell people all the time. That's what I want you to hear in this. Absolutely, if you learn it and you want to learn about options, but don't make that your future, your investment. Learn from them and start slow. And if you want to get into them a little bit, learn some things and straddles and puts and calls, and that's great. But do not make that your I'm going to get rich, because it rarely works out.
And as you were saying it just a little bit different, because the market does go up and down and is not static, that's how you make money.
Yeah, we need that.
If it didn't go up and down and stayed the same, there'd be no chance to make opportunity to make money. So more people make more money when the market's moving up or down than they do when it's just flat.
That's right. We need those movements, and that's the other thing that I want you to always hear that we're saying here. Stay invested. We want you to stay invested. Don't panic. You cannot time the market. There is nobody that's ever been able to do it, or I don't believe will ever be able to do it, because there's too many things that are playing into that. Human nature and emotion and pandemics. We didn't plan on that one. There's too many things and too many unknown variables. So we invest consistently. We stay in the market. We stay invested, and that's how we get our best return. And we do need those ups and downs. That's a great point. It's a great understanding. We need the market to be up. We need it to be down. And that, as we've talked about before on this program, is one of the biggest mistakes people make. When the market's down, they want to pull out. Don't do that. You're locking in those losses, and you don't want to do it. That's when you're buying stocks at a cheaper price. That's when you bought them up here high and you liked them. Now you're buying them low. Keep doing that, and the return of the market will help you to get a better return in your overall portfolio.
It's spring sale on fall clothes.
Good way to put it.
Okay.
I hope that you will continue to send in your questions. They mean a lot to us, because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge, and that you can increase and grow in that, and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in, because we really do enjoy them, and answering them helps us to make sure that we're being relevant and pertinent to you.